What's up guys? In this video, we're talking about candlesticks. We're gonna quickly review the basics and then I'm gonna share with you a trick that's gonna change your trading career forever. If you're trading Forex, this trick will help remove a lot of emotional problems that most of us go through as we're getting started on our trading career. I've coached hundreds of traders through this and not one of them has tried this trick and turned it away. So make sure you're subscribed, give me a big thumbs up, and let's get right into it. What's up guys? Welcome back to the channel. For those of you who are new, my name is Austin Silver. I've been a professional Forex trader for the last 5 years, teaching my systems, teaching my strategies, educating other people on how to get started trading and grow their first account for the last 3 years. And I really first today want to tell you that I appreciate you being here. I appreciate you checking out my channel. Do me a favor, make sure you're subscribed like I said already. Hit that big red button below me. That way you don't miss any of the trading content that I'm constantly putting out for you and the rest of the trading community. Now, today we're going to quickly go over the basics of candlesticks, and then like I said, I'm going to share with you a trick that some of you might have already seen if you've seen my other videos. But this trick has changed, I've seen it, it's changed the careers of many other traders from all around the world. So first, let's jump into just identifying the difference between bullish and bearish candles. Here, as you can see on the trading view chart, I have the red candles labeled as bearish and the green candles labeled as green. So if we move forward here, we're going to first break down the anatomy of a bearish candle. Bearish candles are moving lower. That means that the open price is going to be at the top of the candle body. The high is going to be at the top of that wick. Some people call it pins. They're wicks to me. Because this is a bearish candle, price moves lower. The bottom of the body is the close and the bottom of the pin is the low. Now, the open, the high, the low, and the close are 4 different values that are measured based on the period of candlesticks that we're looking at. So here, as you can see in the top left corner, we're looking at the daily chart. So each bar here represents a day. So this was the day high, the day open, the day close, and the day low. And it's always about that price. Now, you can compare this, if we scroll forward on our chart a little bit more. These bullish candles are very similar to bearish candles, as you would imagine. The only difference being that the open and the close are inverted. So because this is a bullish candle, meaning it's pushing higher, the open's at the bottom, the close is at the top of the body. The high and the low are still the same thing, the top of the pin and the bottom of the pin. So there's a ton of different candle formations that you can try to read and identify. Dojis, hammers, shooting stars, shooting moons, whatever they're called. I don't really use any of them. I do teach candle formations for entry in my course, but I just label them 2 candle formations, 3 candle formations, things like that. They have other confirmations where they're coming off EMAs and I'm using other indicators to confirm those formations, not just the shape of the candles, right? So because we're trading Forex, those of you that have been in the market for a long time, you guys know there are very rarely are there gaps. The reason for that is because the market doesn't close every day. We open Sunday night around 5 o'clock New York time, and then it doesn't close until about 4 o'clock Friday afternoon. So unless there's some major news event, whether it's planned or breaking, other than that, you very rarely will see gaps in the Forex market. Now, to compare this, if I flip over to the S&P 500, you could see gaps everywhere here on the daily chart. You see them everywhere. So this trick that I'm about to explain to you won't work if you're trading another market. If you're trading stocks, if you're trading indices like this, where there's a lot of gaps, this trick is not going to help you as much as it would if you're trading in the Forex market. So, what's the trick? Instead of worrying about the color of your candles, I advocate that you actually turn off the color and make them all black with a white background or make them all white with a black background. Invert the colors. The point being that you take away the difference between the two. Like I said, because price doesn't gap, you're normally able to read these candles very easily, meaning here you see a bullish candle that pushes higher. The next candle to its right, you know the open price will be right where that previous price closed unless there's a news event, unless there's something that causes a gap, which even I would say for 60% of the news events that happen, you don't get a gap, maybe even 70 or 80% of the time, probably higher. I don't want to give you a statistic because I don't want to be, I don't have a solid statistic, but I would say at least 7 or 8 out of 10 times that you see news, you won't see a gap. So here, when you're reading these candles, you can basically read the Forex market like a book. Candle by candle. It goes up, the next candle opens next to it, comes down, the next candle opens next to it, goes up, and so on. So my theory, my point that I advocate for is to remove the colors of the candles, because I think the colors induce emotions. I think the colors get us wrapped up sometimes, and they can have us making stupid decisions when really, if we were paying attention to what the market was telling us, whether it be with indicators or whether it be with just price, we wouldn't be making that decision otherwise. So here's a good example of that. When you see 1, 2, 3, 4, 5, 6 bearish candles, big red candles breaking out for a new low of day, you could think to yourself in this situation, let me short it here. Oh man, let me short it here. Oh man, it moved down again. Let me short it here. I gotta get in now. I don't wanna miss it, right? And then what ends up happening, as you see where I have this square kind of blocking it, kind of not, it ends up pulling back on you before actually moving lower in your direction. So if you got induced emotionally when you saw that big 1, 2, 3, 4, 5 push down here, and then ended up getting short, it ends up burning you. So how do you avoid this? Well, if we take off the colors, just double click on your trading view and make them one color, make them the same color. Now, when you see that move, it looks a lot less emotional, right? Taking the colors off these candles makes it a lot less emotional, so it prevents us from making those stupid emotional decisions. Today, I was short Euro USD. Now, this trade, because I'm using black candles, was pain-free, and I was able to manage it really well. I was out of this trade at about 32 pips right here, 109.01, but look, it ended up pushing about 48, 47 pips lower from my entry. If I'm using colored candles, when you start to see a green candle forming here as it pulls back up, you could get scared and close the trade. Emotions could be like, oh my God, the money's there, take your money, get out of the trade. That's not proper trading. That's not what you want to do. So again, here, not only does removing the colors keep you safe from getting into a trade when it's like FOMO, when you're chasing it, but it also says stay in the trade, don't get out yet, just because you're pulling back a little bit. Here, it was one green candle of pullback. This is a bearish candle, this is a bearish candle, this is a bearish candle. Look at all the bearish candles here. But you could get induced emotionally because of that color. The green and red do trigger psychological, I would almost call them barriers, levels in our mind. And if we start to see red, 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 and you wanted to short it, you're gonna feel some type of way about that. It's very hard not to. So to avoid that completely, take the colors off your candles. Again, this really works in Forex only because there are no gaps. If there was a gap here, you can't tell if it's a bullish or bearish candle just being black like that. You need the colors almost to tell you if it's bullish or bearish because it's not opening right next to the previous candle. But we don't have to worry about that here. You can see every candle painting next to its previous candle. Every single one. I would say 99 out of 100 candles, 99.9 out of 100 candles, it paints right next to the previous one. There's a couple news events that cause gaps, Brexit, like the most impactful news events of the year, of 5 years, of 10 years, those major events, you might gap there depending on your broker. But for majority of your trading, to the point where if you do this, it'll keep you profitable. For majority of your trading, you won't have gaps and you can read it bullish or bearish with black candles, with one color. Do it all red. I don't care. Do it all one color. That's the point. All one color. I would go with black or white to just pull the emotions out of it completely, and you'll be able to take advantage of great trades like this. You'll stay in them because you won't be emotionally induced to get out soon as it's maybe just pulling back a little bit. You have to be able to let trades breathe, and one of the ways to do that is to take this emotional trigger off the plate for you. Take it off the table, cut these colors out, and try the black candles. So I'm challenging you now. You've watched the video, you hear my theory on this. I want to see if it works for you. Like I said, I've tried this with traders all over the world, and no one comes back to me and says, oh, I don't like that, I'm going back. Some people will modify and they'll use all blue or all green or whatever. That's fine. Try it out on your trading, especially if you're in Forex, like I said, and drop a comment on this video after you do it for like a week or so. I want to know how it works for you. I want to know your feedback. If we get anything negative at all, I want to hear it. So yeah, I appreciate you guys being here. I hope this little tip and trick kind of thing helps you in your everyday trading going forward. If it does, make sure you come back, drop a comment, let me know. You can always reach out to me on email. My contact info is in the description. Make sure you guys are subscribed, and I'll see you all in the next trading video.